Hi friends, Simit here from InformedTrades.com. Today is Wednesday, July 23rd, 2014. Time for our daily Forex chart review. Basically in these sessions I share the trades I'm placing, adjustments to existing positions that I put on in the markets, all as a part of helping traders learn. You can learn from my mistakes, learn from my successes. These are real trades, they are verified. All of them are documented on my blog. They're verified by MyFX Book, a verification service. So you can see that these are real trades, and the idea of is to help you see, what real trading is like for those of you who haven't, or for those of you who are real trading. You can get the perspective of another trader, learn from my mistakes, learn from my successes, like I mentioned. If any of the information I'm presenting is unfamiliar to you, check out InformedTrades.com. We have a huge archive of learning material, all designed to help traders learn. Check it out, share your knowledge, ask questions. We can all learn together. Let's get started with a look at the charts. The charts are a little funky today. These are TradingView. TradingView is a small company that's growing and having a little bit of growing struggles. So sometimes their charts are awesome. I definitely recommend them wholeheartedly, but sometimes they don't work during peak hours as well as one would hope. So I apologize for those issues, any technical issues that we run into today. On the chart right now or on the screen right now is a chart of gold, a daily chart of gold, and you can see sort of the range. Let's actually draw that. We were in basically a rectangle here. We're back in that rectangle. We broke out of it briefly. Now we're back in it, and that's basically where we're at. For those of you who are unable to get my saved charts here, which has a deeper analysis, but basically we're still in this range, 1308. Price. The story hasn't changed overnight since yesterday. Today looks like an inside bar candlestick pattern. So inside bar means the entire range of today's candle is within the range of the previous day. This is also called a harami in some lines of thought or some circles. But this often precedes a breakout. So this is the type of consolidation that precedes a breakout. Are we going to see a breakout? I think gold is going to move higher. I favor accumulating this. I think the world is due for an economic reset, and that is going to involve a higher gold price. That's sort of my long-term view, and I'm accumulating with that in mind. Short-term, though, we're still in this trading range, and not only there's one trading range between 1280 and 1330, but there's another trading range between 1310 and 1330. So we're sort of in both of those ranges. I think we're going to break out to the upside, but from a trading perspective, if you want to trade the range, buying at 1304 maybe, and trading it up to 1330, that might be an opportunity to even 1310 to 1330. If you're interested in that short-term trading, like I mentioned, I am holding it for the longer term. Bitcoin. Okay, Bitcoin has been in a very tight range over the past few days. There is a AB equals CD pattern on this. Let me get that up here that I've been watching. A, B, C, and that would give us a target of right there, 677. That's one way of viewing Bitcoin. You could actually pull this down to here. And that gives you a target of right there, 680 or so. So long as point C, this low here isn't breached, I still think we're on our way to 680. Bitcoin, like I mentioned before, I'm viewing as a lottery ticket. I have a small position. If it goes to zero, that's obviously not preferred, but I can tolerate it because the position is small. On the flip side, because the position is small and because of the way I view it, I'm looking out for I'm holding for a much larger gain. I really like to see it. If it goes to 5,000, 6,000, then it may be time to exit. So an educated lottery ticket is sort of the way I like to think of Bitcoin. Okay, now a bunch of trades. First, this was a trade I closed yesterday, Pound Canada. I closed it because we had these two tight candles, and they were actually, there's a 50 simple moving average again. TradingView's charts are kind of broken this morning. I apologize for that, but there's a 50 simple moving average right here, and I thought I'd close it there because we saw the candlesticks there. It looked like price could have been reversing. Price went further, so I took a small profit. It probably would have been better for me to hold on to the position, but we live and learn. I'm glad that the decision, I don't think it was rash. There was a logic to it. The question is that logic worthwhile? Should I be closing trades prematurely like that, or should I just move the stop to break even and let the trade play out? That's something to consider, something I'll definitely be thinking about more going forward. But I just want to share that. I'm out of this trade anyway. I thought that was interesting, worth commenting on. Okay, lots of yen activity. That's what I've basically been talking about nonstop over the past few sessions. Let's take a look at Aussie yen, which is far and away doing the best. Big up candle today, so that's really nice. I entered right here. We have this railroad pattern, tweezer pattern, when you see a big red candle followed by a big green candle, or vice versa, where the wicks are small and the candles are big. That's known as a railroad or tweezer pattern. It's indicative, often indicative of a reversal. Of course, we want to evaluate price in context. When we see price declining down, as we saw here from June 30th, price is falling. Then we see the tweezer pattern. That may be a cue for a reversal. Of course, there's more to it. There's a broader uptrend. So I was looking to go long anyway, looking to buy the dip. And that's sort of when we saw a tweezer pattern. It occurred at support, 50% from this swing low to this swing high. We had that 50% pullback. So we had all those signs I look for. Entered long here. The profit target is still right up here, still at these all-time highs. So the trade has me de-risked. I've moved my stop to break even. So if price comes all the way back down to 94.50, I'll get stopped out. Won't make any money, but I won't lose any money either. So far, this trade is going well, and hopefully it'll reach the profit target here, 96.50. That's just one yen trade I have on. Of course, I have a number of other yen trades on, such as Canada yen. Long Canada yen. Got long here, basically. This isn't really a tweezer pattern, but it's similar. But basically, this was a major, let's actually plot that line. And normally, for those of you watching these, I have all these charts, the mock-ups already saved, which is definitely preferred. Had some technical issues today. In any event, we pulled back to support, and again, this is if we look at the swing low to swing high, it's a 50% pullback. We have a big red candle and a green candle, so a mild tweezerish pattern. But more importantly, the 50 simple moving average is right around here. We had the 50% retracement. There is this support level, right? It was a resistance level here, here, here. So now it's acting as support. So that's all good. I did de-risk this trade today. Now, that may have been premature, but the reason I de-risk is because I have so many yen trades on at the moment that in the event I'm wrong, I don't want to lose too much money. So one could argue that maybe I should have put less yen trades on. That's an interesting argument. In any event, the way of making sure I'm not overly exposed to the yen is that I de-risk my Canada yen trade, which means my stop is now at my break-even point. This says target profit, but that's actually where I entered the trade. So if price comes back down and hits this level here, I'll be taken out of the trade at break-even. I won't have lost any money, but I won't have made any money either. I'll just be out of the trade. So that was my way of de-risking a trade. Is my way of dealing with the fact that I have a relatively large yen position on. I don't want, while I believe, I think the trades are sound technically, I still don't want too much exposure. De-risking is a way of reducing your risk exposure, as the name implies. Okay, pound yen. This one got filled today, this morning. I'm in Chicago, so a little bit early morning Chicago time. Pound yen got filled. It's a slight profit, a slight floating profit. I entered right around here, 172. 172.72 is where I entered. Right now we're at 182.83, so basically 11 pips in the money. I think this is a solid trade. We're in a clear uptrend. We did see these are nice candlesticks right here, indicative of a range, potential accumulation going on. Anytime you see a range of narrow candles, that suggests a breakout, and it also suggests that buyers may be accumulating, or conversely, sellers may be distributing, getting ready to sell and offload. So I think that's going on in pound yen, and I decided to go long here. We also have, I normally don't look at trend lines or don't consider them too much, but sometimes they naturally stick out. You can basically see that here. Nice trend line going back to February of 2014. We're at it. So for those who like trend lines, those who like to buy the dip, that's interesting. Of course, I'm more interested in this line here, right? So for me, horizontal lines trump diagonal ones, although in this instance, we get both. So that's really nice and reassuring. So that's Canada yen, or excuse me, that's pound yen. And basically, we're going to see the same story on all these yen pairs. We looked at Aussie yen, we looked at Canada yen, we looked at pound yen. One more, New Zealand yen. Now, of the trades I've just mentioned, of the 4 yen trades I have on Aussie yen, Canada yen, pound yen, New Zealand yen, Aussie yen and Canada yen have been de-risked, meaning if price, right now all these positions are in the money, which is nice, but if price reverses and takes out my stops, Aussie yen and Canada yen I won't lose money at, because my stop is at break even. It's at where I entered the trade. Pound yen and Kiwi yen have not been de-risked. They're still too close to where I entered for me to really, I need to allow that cushion. So those trades haven't been de-risked yet. Kiwi yen, we entered right around here, 87, where did I enter at? 87, 88 basically. So it's just a few pips up, basically at break even right here. The 50 simple moving averages here, again, we have a nice pullback, right? We saw this all the yen pairs where it really rallied last week or a couple weeks ago, and it's this decline. So I'm buying the dip in an uptrend on all these. That's basically what's going on. No action to take here on Kiwi yen. The other important thing to note is that I'm seeing signs of strength in all the currencies I entered, Aussie yen, Canada yen, pound yen, Kiwi yen. I'm seeing signs of strength on other currencies besides the yen. For instance, that takes us to our next trade, which is Kiwi dollar. And same idea here. This actually looks very similar to the Kiwi yen chart. What's really going on interesting here is that, well, one, we have this range right here, right? And that was established here, it was established here. You could argue it was established here, here also. So well-established support resistance level here at 86.60. And now we have the market, Kiwi dollar is forming a range here. This looks like accumulation, like I mentioned. We have this range here at a support level. Looks like buyers may be stepping in to defend the support level. The market is consolidating before a breakout. We're in a larger uptrend, and if we look at the Fibonacci retracement levels, if we go from this swing low to this swing high, well, we're still short of the 50% level. Did it from this swing low. Fibonacci is a little subjective. The way I use Fibonacci is I just want to see that a major pullback has occurred. I'm basically looking for trending markets, and I'm looking to buy pullbacks. So if the market's trending up, I don't want to buy when it's up. I want to wait for a pullback and then buy. Fibonacci is a way of measuring that pullback. We look at swing low to swing high. I really like to look for a 50% pullback, and that's one sign. If it pulls back to 50% Fibonacci retracement level, and there's a 50 simple moving average, and there's a support level, and the candlesticks are showing an accumulation pattern, that's the kind of setup I really like. Looking for those multiple factors. So that's Kiwi dollar. Basically this is slightly in the money, but still have to wait. I'm not moving my stop or anything. And then one last trade that I put on this morning, dollar Canada. And I have the specifics documented on my blog, but basically I've gone short dollar Canada. We see a clear downtrend. Going back to here, March 20th. You can see that right here. We're back. We've pulled back to this trend line. See, so clear downtrend. Market fell here. It bottomed July 2nd. Now it's pulled back here. So I thought it was time to short. Basically, my target profit here is, or I'm set to go short, or I have got shorts already gotten filled at 107.28. My stop is at 107.76, so I'm risking 48 pips. My target profit is 105.58. I'm risking 48 pips to gain something a little less than 200, 178 or something like that. So the reward risk comes out to 3.54. So for every pip I'm risking, I'm looking to gain 3.54 on this dollar Canada trade. The specifics are discussed much more on my blog on InformedTrades.com. Check it out there. The chart's mocked up. I did that before TradingView was having problems this morning. And that's about it for the trades that I have on. You know, this is actually one thing I do want to mention in closing, is that I have quite a few trades on at the moment. Let me see my account. 1, 2, 3, 4, 5, 6 trades on at the moment, 2 of which have been de-risked. So I'm actually at peak risk capacity. I have 4 trades on that my stop is not at break even. And if all my stops got hit now, if the market reversed entirely, right now almost all the positions are, all except one, my dollar Canada, small floating loss, but the rest are all floating profits. If it reverses instantaneously just like that and all my stops get hit, I will lose 1% of my account balance. And I don't want to be in a situation where I'm risking more than 1% of my account balance. So I won't be putting on any other trades until I have an opportunity to de-risk, which means move my stop to break even where I entered on some of the other trades. That's about it for my trading for today. Busy day, lots of activity in the markets. And also, just one other thing I want to mention is I've got 1, 2, 3, 4, 5, 6 positions on at the moment, and I'm still at a little less than 3-to-1 leverage, meaning the size of the positions I'm trading is about 3 times my account balance. So for instance, I don't want to disclose my account balance for my own privacy reasons, but let's say I had an account balance of $10 million. Unfortunately, I don't. It's less than that. But let's say it was $10 million. That would mean that with all these trades, I would be trading $30 million worth, right? So if I had $10 in the trading account, I'd be trading $30. And this is where I'm really at peak risk capacity. So I mentioned that just to give you an idea of a risk management of my approach, at least. You'll see lots of brokers advertising 50 to 1, 100 to 1, 400, 500 to 1, 1,000 to 1 leverage. That's really high risk. You're basically playing lottery at that point. I'm at peak risk, or I'm almost at peak risk, and I'm right around 3 to 1. That's not to say that this is the best or only way of doing it, but something to consider. There are ways to safely build a large position, and that's the name of the game. I'm carefully de-risking trades, building this position over time. I think those are principles that can help you safely build trades when the time is right. When you see the opportunity, when everything's going in your favor, that's when you want the large position. However, you always have to build it safely. Otherwise, you're going to blow up, and nobody wants that. Blow up in the negative way, not blow up positively. That's about it for my trading for today. Any questions, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.